Hi, I'm Stephen Carson, coming at you from St. Louis, Missouri, in these United States. We'll bring on Black Horse, a somewhat sick Black Horse from Canada shortly. And I just did want to mention we do have one more thing happening this year. This is the last Econ Minis. I'm not going to try to do more left wing terror. Didn't feel like quite in the Christmas season, so we'll continue with finish up that left wing terror series first thing next year. But this will be our last regular Thursday show. We will have an art stream to close out the year like we usually do to judge the book covers. There is still time to slip something in. I believe the deadline is tomorrow at midnight. So you could still slip something in. I saw something very funny related to the Left Wing Terror series that somebody did. Funny related to the Left Wing Terror series. I know it sounds impossible, but join us at between Christmas and New Year's for that. I haven't found my judges yet. Got better get on that. Also, we might have a surprise uh, someone come back. I'm hoping that you will enjoy to hear from. Okay, so that's all I guess I wanted to say. I almost hesitate to mention supporting the show because like everybody's broke these days. But if somehow you aren't broke and would love to support the show, uh, then we have a public Bitcoin wallet, and Subscribestar is the meat and potatoes of the support of the show, where people generally contribute a measly $5 a month to keep this thing going. All right, Black Horse, doing better than you were a few days ago, right, sir?
There you go. I will do my best to give the cough button an appropriate workout tonight.
um, all right, so Lady of Shalott, who is always helpful, has reminded me of something that we should start the show off with because I love to revisit stories personally. I like to have themes and topics that we follow along. And we devoted a whole show to talking about Sam Bankman Fried and comparing him to Bernie Madoff and wondering what's the think emoji? The think emoji, right? What's going on with Bernie Madoff dying in jail and Sam Bankman-Fried being featured on a New York Times uh, thing alongside the good and the great, and well, that changed because he was arrested in the Bahamas. He was careful not to set foot. I know even that New York Times event, he did not set foot in the United States. He uh, stayed in the Bahamas, but they nabbed him anyway, and there's a big indictment. Anyway, I think you have some thoughts already, even though he just got arrested, the indictments just came out. A few things have been happening, more to come, right? But what are
Yeah.
you thinking so far about this?
Well, there are a couple of really interesting issues at play here. So the reason why Bankman-Fried was right to be careful not to set foot in the continental United States is that in the continental United States, there's a whole bunch more people who can arrest you than there are if you're international. So no state government, as far as I know, can issue a warrant for your arrest outside of the continental United States.
Mm-hmm.
Uh, Certainly, like the CFTC or the SEC can't issue indictments that force extradition from somebody like the Bahamas that doesn't have like a standing extradition agreement. So if he manages to stay in the Bahamas, the only the list of people who can go after him is much shorter.
Right, right.
But one of the people who can go after them is the Southern District of New York, and so they've put him up on charges that include fraud and campaign finance violations, um, arguing that the massive donations to the DNC that he made that we discussed in our last stream were actually illegal. Um,
Mm-hmm.
which is really interesting because uh, as the indictment was unsealed yesterday, I believe. So I've only kind of had a very brief look at it, but it will be interesting to see how many people around him get charged as a consequence of this.
Right.
The SDNY is kind of it's famous for two things. First of all, it's got a 95% conviction rate, so
Oh, right.
that's one element of its fame. The other element of its fame is it tends to be the plaything of a certain group of elites in New York. Um, And one of the things that really cemented for me the perspective that Mr. Bankman-Fried is going down is when I
Mm.
started to realize from comments that I was hearing professionally that the question of who's going to get his head is like there's a big jurisdictional prize up for grabs between the CFTC and the SEC
Oh, uh-huh.
over how crypto will be regulated.
Wait a second.
So,
SEC, I know, but what's the first one you said?
Commodities Futures Trading Commission.
Okay.
Um, so they regulate the futures market, whereas the
Okay.
SEC typically regulates the equity and bond markets.
Right. Okay.
And so,
And crypto, it's not entirely clear where crypto would belong in those classifications, or if it's maybe
well,
even sort of a
the
new thing, right?
CFTC has kind of made grabs for jurisdiction in this area,
Mm-hmm.
especially because some of the first ways to trade crypto legally. Well, okay, that's not true. Uh, Over the last couple of years, there have been futures on cryptocurrencies
Got it.
put on
Okay.
major exchanges,
Yeah. Yeah.
which the CFTC took as a signal to say, I'm going to regulate this now. So if the CFTC gets to be the one to convict him, then it sets precedent that they have jurisdiction. Whereas if the SEC gets to be the one to convict him, then they get
Yeah.
they get jurisdiction,
Got
and
it.
with
Yeah.
jurisdiction comes power, and these people all love their power. So
So what you, the point is, what you were hearing from your colleagues was not, hey, I wonder if he'll get in trouble. It was, who's going to get him first, right?
who's going to get him first?
Yeah.
And neither the CFTC or the SEC can really get him while he's in the Bahamas. So
Yeah. Yeah.
they need somebody to bring him to the U.S. But once they bring him to the U.S., there's a million people who would love to nail him. So
So I'm
if
a little
the
confused. You said Southern District of New York was able to get him in the Bahamas. Why aren't they
yeah,
just
so
a local thing? Why would
the
they? I thought you said state governments, for example, could not reach beyond the borders.
well, Southern District of New York is a federal court, not a
Oh, I
state court.
see. Okay, gotcha, gotcha. Okay, sorry.
So
It's a federal court went after him, and they could reach into the Bahamas and get him
that's
arrested.
right, because
Got it.
they could. It's kind of interesting because they managed to get him arrested before the jurisdictional hearing, which I'm not deeply familiar with how these things normally work, but it seems kind of backwards to me.
Yeah, yeah.
I would expect you'd go to the Bahamian government and agree to extradite before you go and pick them up, but
Mm-hmm.
you know,
Right.
what do I know?
Um, this is a little bit of a rabbit hole, but you had shared with me about a Canadian, much televised Canadian financial expert that already seems to have been tarnished by this. Could you think
Oh
you can
yeah,
give a
Mr.
really,
O'Leary.
yeah, a really quick summary of that? Because that was, I guess the reason it interests me, I mean, those outside of Canada probably haven't even heard of the guy, but the reason it interests me is, you'd think that, well, he just got arrested this week. How many consequences, we'll find out later what happens. Well, some consequences are hitting people right now. So that's why this was interesting. So can you summarize that story really fast?
Yeah, so Kevin O'Leary is kind of a famous name in the financial press in Canada. He made a name for himself in the private equity markets, and then he launched a series of funds. He was on a show called Dragon's Den, which is like reality TV for private equity, I guess. Um, so
Yeah.
he has kind of a name. He got a little bit controversial recently when his some people died mysteriously in a boating accident that he was involved in.
Oh.
Um, and anyways, in the last, famously, he went on. I think it was BNN, which is our equivalent of CNBC,
Mm-hmm.
and said in I guess 2019 that crypto was like basically a scam currency and you should have nothing to do with it. And then he launched crypto funds and talked about how great current crypto was, and became this massive booster for FTX as like the future of crypto.
Right.
And it turns out that we discovered that he received 50 billion in combined cash and tokens.
No, wait,
Uh,
million, right?
Sorry, 50 million. Sorry,
Yeah, yeah.
in combined cash and tokens in exchange for promoting FTX. So I shared that on Twitter, to remind people that you know whether you know it or not, everybody's always talking their books, and in public, right?
Oh, sorry.
So
This was the thing where we misunderstood what he was saying. I'm checking headlines. 1-5, not 50. 15 million.
1.5, fine, cash and
Yeah, yeah.
tokens,
Right, right.
plenty enough money to you know, to run his mouth a little bit.
Yeah, right. So this rather, I would assume, has rather tarnished his image as a someone to look to for financial advice.
Yeah, well, you would hope. You would
Yeah,
hope.
well, right. We thought Kramer, Jim Kramer, would be off the air years ago, right? But I
Well,
gather he keeps broadcasting somehow. So,
yeah,
um,
I mean, uh, it, look, after his Facebook call this year, nobody took him off the air. So what are you gonna do?
right. Bourgeois Beatnik in the chat makes a good point that I just think is funny to bring up, which is that in his lengthy defense of himself, which got released somehow or leaked or something like that, Sam Bankman-Fried, uh, he sort of, I remember I just read like right at the beginning, he's like, I just want to make my customers whole. I take responsibility for this. And then evidently he went on for pages and pages blaming everyone except himself. And in particular, he mentioned that he brought up anti-Semitism as one of the reasons he's going down.
Oh yeah.
I have to say, Black Horse, I am very cynical about him bringing that up in this industry. I just I this does not pass the laugh test to me to think that he's in trouble because of anti-Semitism. I think he's in
Well,
trouble because he scammed a lot of people. You know?
so there are a couple of things that are true here. First of
Yeah.
all, in our system, everybody gets an opportunity to defend themselves,
Yeah.
and
Yeah.
the more obviously guilty you are, the more ridiculous your defense is going to be. And so,
Right.
you
Right.
know, there's not much defense for what he did. So maybe this shoe will fit.
Right. Right.
The other thing that I think is kind of interesting is, um, you know, for those who would say that there's a single monolith of the elites, this
Mm-hmm.
should be a good reminder that there are actually some pretty important divisions there.
Yeah.
Um,
Right.
the people that SBF is going to be accusing of anti-Semitism are all Jews.
Right.
Well, okay, I shouldn't say that. There will be a lot of
A lot of them will
stains.
be Jewish. Yeah. Yeah. Right.
Yes,
Yeah.
and so like
That
this is
that's why I was
obviously nonsense,
that's why I was
but
saying
there are
it doesn't
different.
it doesn't pass the laugh test. It's like I'm just imagining him saying it to their faces, and they're just like, "You got to be kidding! What
Well,
are you
you're
talking
you're
about?"
gonna tell me that the SEC or the CFTC are anti-Semitic? Like,
Yeah, right.
give me a break.
Yeah, this is not plausible, shall we say? Uh, yeah. So anyway, I thought that was amusing. Okay. Any last thoughts on that story before we turn to our main topics of the day?
No, but I recommend that nobody give a regulator an opportunity to gain power by prosecuting you. It's not a recipe for success.
Oh yeah, that's a good point. It's not just that he did a scam. He did a scam with the crypto thing, which the governments and regulators are just longing to sink their teeth into right now.
Yeah,
Right.
so
So
it's
yeah, yeah. He was a juicy fat target, basically, is what you're
yes.
saying. um, okay, well, let's turn to our first chart. I promised that there'd be a little bit of upbeat nature with our final Econ Minis before Christmas. So we have something that's less upbeat. So we're going to just get that right out of the way before we get to some slightly more encouraging things. And that is that there's a number of indicators that Black Horse was really bringing forward throughout 2022 for us that had us concerned. And as we're going to see, some of those indicators now are going in a much more encouraging direction. But we're going to start off with one that isn't going in an encouraging direction, and that's the yield curve.
Yeah.
So
So
is
we
it
brought this.
worse or it just isn't better than what
It's
we've been
worse.
seeing? It's actually gotten worse. Okay.
Yeah. So we brought this to the audience's attention, I think about midway through the year when it first inverted.
Yeah.
Um, so at the time, uh, sorry, recall what an inverted yield curve is. An inverted yield curve is where the interest rate demanded for short-term debt, in this case, U.S. government debt, is greater than the interest rate demanded for long-term government debt. And what an inverted yield curve indicates is a market expectation that interest rates on new debt issued sometime after the inversion are going to decline. And given the way that the Federal Reserve sets interest rates, that's an indication of an expectation of a slackening economy. So uh, when we first saw yield curves invert early in the year, it was an indication of a coming recession. We're now in a recession by classical definition, uh, but the fact that the yield curve inversion has gotten stronger is an increasingly negative indication for US GDP going forward.
Right. So this is, well, okay. Tell me this. Would you say some of the other indicators we're looking at are they are good signs, but they're sort of a more short-term nature, I think. What you're talking about with the yield curve is more of a medium to long-term type concern, right? It doesn't mean we have a recession tomorrow necessarily, but it suggests, historically, it would suggest that we have a recession coming,
Well,
maybe in 2023, say,
if you
sometime in
look at the
2023.
area where the slope of the yield curve is negative, it's between 1 year and 5 years mostly. Uh,
Okay,
and so what that's doing is it's indicating that the market expects uh, some kind of serious recession in the 1 to 5 years from now
got it.
time
Oh, I
time
didn't know you
horizon.
could read it off like that. That's nice. Wow.
So, or more accurately, it's expecting that the Fed will respond to a severe recession in the 1 to 5 years from now time
Mm-hmm.
horizon.
Right, right. Doesn't mean there will be a recession, but there will be a threat of one, and either we'll get one or they'll do something to try to kick the can down the road, which is what they usually do, frankly. Um,
Yeah, well, and the market expects, well, the market isn't right about everything, but if you look at the historical record, yield curve inversions are extremely reliable indicators
wow.
of of recessions, and they often persist for very long periods of time. So
Yeah.
the first famous yield curve inversion occurred in the British Empire in the 19th century and
Mm.
predicted like the secular economic decline of the British Empire and lasted for like 20 years.
Oh wow.
So
Yikes.
these are indicate. I mean, that one is more pure because at the time there was no Federal Reserve. Interest rates were purely market set, and so you had a really clean piece of data. Now we have a much less clean piece of data, but still,
Mm-hmm.
it's worth having some respect for the indicator.
Yeah. Okay. So if I was going to take this, what you've just indicated, how to read this yield curve, the top line here, the black line on here, uh, take this really literally, then oh, and so Forged in the Ashes says, have you looked at PMI indicators? We'll come back to that in a moment. Okay, so if I took this really literally, the uh, biblical analogy comes to mind, right? Which is you've got a year more to like set things aside before hard times come, right?
Mene mene tekel parsin.
Yeah, it's coming, right? But in other words, this would indicate because of the positive slope over the next half year. Well, it's kind of neutral the second half there, but over the next half year to year, that would indicate there's still kind of time maybe to sort of set yourself up for a recession situation later, right?
That's correct. That would indicate that the market is predicting that in the next year, interest rates will either continue to rise or remain neutral. We're not looking at a severe a problem that the Fed feels like they have to react to, but
Mm-hmm.
in the period after that, we're expecting that there will be an event that the Fed will have to react to.
Okay, PMI indicators. Do you want to comment on that real briefly?
Uh,
You don't have to.
uh, I don't want to. I don't want to comment
Okay.
off the cuff. That's Purchasing Managers Index.
Mm,
So it's connect. I tend to prefer to look at BLS PPI rather than PMI, um,
okay.
but I would say that more the reason I prefer that indicator is because the PMI indicators tend to be more international in nature, whereas
Mm.
PPI tends to focus more on what's going on within the United States.
Mm-hmm.
And you know, the question as to whether this show should be about, well, the larger area you're looking at, the harder it is to interpret the data.
Mm-hmm. Um, yeah, okay, I see what you're saying. So, yeah, you could say that that means we have a narrower focus, or you could say that it's we're more likely to be on the money if we don't try to predict the whole world's economy. Right.
Yeah,
Yeah.
and so you'll see a pattern in the things that I try to do on this show. I try to make predictions that I can actually justify rather
Mm-hmm.
than um, rather than just kind of say stuff. So I
Yep.
do my
Yep.
best.
Yeah. Well, as we're going to see in just a moment, you do pretty well. So, turning to wheat futures, we were quite concerned. As you can see, earlier in the year, it was trending up, and then it looks like it hit a peak around May to June. Um, but I think, if I remember correctly, remember we had the episode, Will Europe Starve? And then later I kind of regretted it and thought it should have been, Will Europe Freeze? Because that has seemed to be the bigger problem. But I can see why we were probably thinking that way because uh, we saw, for example, wheat prices really climbing a hill earlier in the year. Um, so first of all, you said we got it right, and then explain that, and then secondly, what happened here?
Yeah. Okay. So you've got two distinct things going on here. Um, you have a secular pattern here that you can see going back into well into 2021 of the value, the price of the underlying commodity climbing due to structural issues with the supply chain, increases in input costs. And then you see this disruption that we saw in the middle of the year, beginning with with the Russian invasion of Ukraine,
Mm-hmm. Right.
peaking in May, and then rapidly declining. Um, and in both the episode titled "Will Europe Starve" and the episode where we reviewed the effect of sanctions on Russia, we
Mm-hmm.
discussed the fact that because the wheat market is because the food market is so global in nature, sanctions and sanctions are basically impossible to enforce
Right.
in the wheat market without
Yeah.
a complete blockade of Russia, and a
Yeah.
complete blockade of Russia with both India and China kind of on side with continuing to trade with them was just not going to
Right. Right.
happen.
It means the
And so you
United. It means the U.S. empire taking on like most of the population of the world.
yes,
Right.
all at once, and
All at
doing it
once.
in order to prevent Russian farmers from exporting their wheat so that
Right. Right.
you know people in India don't starve or something. Like
Right. Right.
this is not, I it could happen, but there just
Yeah. Yeah.
wasn't any reason to believe
Not
that
very
it
likely.
would happen. And so we predicted that the disruption in the market would probably clear, and
Right.
what we're back to here at the end of the year is a situation where prices are a lot higher than they were, 18 months ago. A lot of money was printed, um, and some of the input costs are higher, but the disruption seems to have more or less passed.
Right. And notice the pattern. We're going to see this a couple times here. It, we hit a really scary peak sometime, say mid 2022, and then we're back down, but we're not back down to where things were pre-COVID, or even in the case of this chart, even in early 2021, we're still up. So that's why in the way that I said, signs of hope, and the thumbnail we did for the video in the marketing, I've tried to make it clear we have some good news, but it's not the news we would hope for, right? The news we would hope for is that we're kind of getting back to normal, right? Um, Back to sort of pre-COVID prices, pre-COVID levels of inflation, things like that. And that's not really the story that we get to tell, unfortunately. But compared to, if you thought that those trend
Well,
lines earlier in the year were going to just keep climbing.
you
Uh,
might remember
this
all
is a
through
lot
the
better than
summer
that,
of
right?
you might remember all through the summer of 2022 a whole series of figures uh, in the online space were talking about like global food shortages
Mm,
and the
hmm.
consequences that they would have to the world.
Right,
And that future, at the very least, is not materialized. So it's
right.
worth noting that.
Yeah, yeah, and I'm really pleased, uh, Black Horse, that we've been able to do something here, which is to my taste. I do not like. I've written about this recently on Twitter. I really do not like um, manipulating people with fear. I feel like it's evil and it's been done a lot, you know. And I understand that people are trying to get clicks and trying to get views, and so they'll lean into that sometimes. Um, I really don't like it. I think it's wrong, morally wrong. And so while we have highlighted concerns throughout the year, I think we've done a pretty good job of not being alarmist, not being fear mongering, not trying to freak people out, but just say, here's some things that are going on. Here's what we think will happen, and might suggest certain sort of short-term remedial actions. But I really don't want to be the Chicken Little show, And I think we've done a pretty good job of not being that this year, right, sir?
Well, we're doing our best.
Yeah. Okay, but yeah, again, tempered optimism here, not the crisis and catastrophe that people were hoping for, but not back to normal either on wheat. Oh, and sorry, I had one more question about this chart. Just looking at it as we're studying this. Oh, I could make this bigger. Sorry, guys. Just realized. Uh, make it a lot bigger. Okay. Um, uh, if you try to keep that trend going from earlier in the chart and sort of ignore the spike, um, what is that? October looks like it's kind of just we're back on that trend of gently going up. Well, not so gently, really, right? But right at the end here, I would say that the most recent data point we have actually it makes it look like it's not continuing that climb that's been happening since what mid 2020 or even earlier. So what do you
Yeah.
make of that?
Well, so one thing I want to point out about this is called the candlestick chart.
Yeah.
So you see it's made up of a series of vertical lines, and each one of those vertical lines represents the price range of the commodity during the week that was measured.
Mm-hmm.
And you'll notice that in the period between August of 2021 and maybe, I guess,
No, you're talking August
right,
2020. I
August
think you're talking about.
2020
Yeah.
and Jan 2022, you'll see a series of very, very short candlesticks representing relatively little volatility in the wheat market. Um, in the period after the spike, you'll see the candlesticks are by comparison extremely large.
Yeah.
So we still have a lot of volatility in this market, which indicates
Right.
that it's very tight supply and demand. Um, so there are a couple things to say about that. First, markets very rarely stabilize at high volatility.
Mm-hmm.
Usually they stabilize as volatility comes out of them. So
Got it.
you might see some further upward volatility, you might see some further downward volatility. So I wouldn't draw conclusions that we've settled into a long
Got it.
term trend here.
Yeah.
Uh, just I I would just be a little bit careful with that.
Right. So
Um,
you'd want to see several months of very, very short candlesticks, something more like what we see at the early part of this chart, before you'd
with a
think that maybe it's settling into something. Right.
so it would be, before I'd identify it as settling into a long-term trend, you should
Got
also remember that stuff like this is, I call it chart voodoo.
it.
So,
Mm-hmm.
the voodoo name is important here. Nobody predicts the market successfully, or at least I
Yeah.
don't.
Right.
So,
Right.
but I don't think it's proper to read a newly formed trend here yet. I think you
Yeah.
should
Gotcha.
just have a look at it and
Keep an eye on it. Right.
yeah.
Okay, all right. Then let's turn to something that's really been on my mind. What we've got here is with the candlestick charting style is make sure I'm saying this right. Dutch natural gas with the yellow gold line, whatever, is actually NYMEX gas futures. So that would be natural gas futures. So that would be basically
Yeah,
Europe is the candlestick, the higher level there, and the lower level is essentially North America. I guess fair to say, right?
yeah. So that's North
Yeah,
America terminating in Henry Hub, which is somewhere on the Gulf Coast, and
right.
and then you've got the at port in the Netherlands. It's worth noting that at port in the Netherlands it is cheaper than it is in other places in continental Europe, but it's the easiest place to get a good price indicator at high volume.
So
So,
this has been a story really on my mind, especially recently as we get into winter in Europe. And I've got a good friend in the north of England who talks about how he's using 2 hours of heat a day. He treats himself to 2 hours of heat a day. Just like wow.
yeah.
And it's a cold winter from what I've been seeing. It's not a mild winter. It's actually a pretty cold winter. They're expecting a lot of snow.
Well,
And
they had a whole dump of snow in the last week, so it's really kind
okay,
of
right, right,
bubbled to the surface of social media.
yeah.
Um,
Yeah, so this story has really concerned me. And again, you go back. Now, this wasn't the middle of 2022. It was more as we were heading into the fall. But you go back and you see this spike that is just terrifying. Um, as Black Horse was pointing out to me, this is a percentage chart. So this is percentage of the price of natural gas relative to, I guess, early 2020 as its uh, 0 point, right?
yes,
Zero
yeah,
zero percent is early 2020, kind of like a pre-COVID baseline. Um, so everything you're seeing here is a multiple of the price of pre-COVID, right? So even the gold line, which is way below what's happening in Europe, even the North American line here is showing a doubling of price still,
yeah. Well,
right?
and
So
my
which is
heating
not
bill,
not great.
yeah, I mean, my heating bill here in Canada is like two and a half times what it was last year.
Wow.
So that like that that's well, I'm sure that there are people for whom that's a real hardship.
Yeah.
Uh,
Right.
so
So that's the North American story. It's not a great story at
yeah,
all. Though, as we can see, just focusing on that line for a moment more, it looked like it might be spiking into some scary place, and it's kind of settled down a bit. Still not back to where it was, but not
yeah.
spiking up to insane, 500% levels.
Well,
Meanwhile, go ahead.
the other thing about the North American story is there's still a lot of taxes that sit on top that could be eliminated
Hmm.
if you wanted to do something to support the population. So like in
Let
Canada,
us imagine.
we still have like green taxes for like the evil use of carbon to
Hmm.
burn natural gas to heat your home in the most efficient way possible. So that's something that we still do. Whereas in Europe, the governments have all taken steps of various kinds um, to try to mitigate the impact of this on their population the best they can,
Right.
or maybe not the best they can, but at least to
Better.
some degree.
To some degree, right? Okay, so now turning to the Europe story, and Dutch natural gas price, as I understand it, Black Horse is a reasonable proxy for what they're facing in Europe. Um,
Yeah.
so turning to this story, it has settled down to around 600% of the price of natural gas back in the pre-COVID days. So it's 6 times the price. That is really frightening. Um, and but it's down from highs of 1,200%, 14, 16, almost reaching 1,800% that was just 1 week though, to be fair. But over 1,000% for a month or two, which is really really like basically people are just going to be icicles, popsicles this winter. And it settled down
Well,
from that a
if
bit, but it's still bad, very bad.
if your friend was heating his house for 2 hours a week, or for 2 hours a day,
Hmm.
at 600%, you know, At 1200%, maybe you'd only be heating it for 1 hour a week, a day, and
Right.
1 hour
Right.
a day, that's a lot worse than 2 hours a day. So,
Right. Right. Yeah. So this is not a good story, but again, it's settled down a bit from really insane high prices, and also can't help but notice now that you've taught me how to read a candlestick chart, when it got up to those really high rates, the volatility is really. I assume that that is not something you normally see in the market, that kind of
well,
volatility, right?
that's indicating really inelastic demand and really inelastic supply,
Mm-hmm.
where you
Mm-hmm.
get that really intense volatility. And
Yeah.
so, obviously, both sides have found some more play. Um,
Right.
as you can see from your friend's example, people have figured out how to use a little bit less,
Right. Right.
and from some of the articles I've been reading, people have been finding more and more innovative ways to sanction bust, in
Mm-hmm.
order to get natural gas where it needs to
Got it.
be. So,
Right. Yeah, it's interesting that you say that you see some indication that European governments have been more uh, acting in the interests of the people than, say, the Canadian government, for example, or even the United States government under President Biden, I would say. Is that
well,
fair?
I think the pressure on them is greater,
Yeah,
um,
that's true.
because I think, like, if they hadn't done anything, the optics of having like large numbers of your citizens freeze to death in the winter, they're really bad.
Yeah. Even
um,
for them, that's a hard sell, right?
so you know, uh, that's um, what can I say?
Okay, so anything else on this before we turn to one more energy market?
No, I think we've covered what
Okay.
we need to cover.
Then one that a lot of us pay attention to is just plain old gasoline. Again, this is NYMEX gasoline futures, so that's North America. And again, early 2022, it looked like it was going to the moon, and it has settled down starting in the summer. Um, Jogged a little bit there, but now it's actually down to where it was kind of at the beginning of 2022. Again, look look
Sorry.
um, look earlier in the chart to like pre-COVID, early COVID days, and we're still way up from where we were, like twice as much. Which this surprises me, Black Horse, because I don't think the gas at the pump is twice as much as it was. I'd have to go check
Well,
my records.
remember when we looked at this before,
Yeah.
price of the pump is something like somewhere between 50 and 80% tax.
Mm-hmm.
So, tax and distribution, which is why at $3 a liter, or sorry, $3 a gallon on the future, you saw $7 a gallon at the pump in California. Um,
Mm-hmm.
so that's that's a thing to put out there. So it actually it makes the volatility in the underlying commodity look smaller when you've got that much layered on top.
Okay. Got it. Um, okay. So
So, but
again,
the reason we
again, you're
wanted to pull
saying
this
that.
out
Yeah. Go ahead. What did you want to comment on this one?
the reason we wanted to pull this out, a couple of reasons. First of all, this is a pretty fundamental aspect of people's lives,
Yep.
a measurable way of looking at economic stress, and we've got a measurable a way of looking at economic stress kind of easing. Second, as we talk about the inflation story in Western economies, you have two really really large inputs that we're now looking at. So
Mm-hmm.
we looked at natural gas prices, which are like almost a perfect proxy for power prices, which
Mm-hmm.
are a big part of industrial work. And then we've got gas, which is like the key input in distribution costs, because whatever it is you're
Right.
buying almost certainly uses gasoline in order to get to where you buy it from. So when we talk about the inflation story, we can't talk about that properly without talking about the underlying commodity stories, because scarcity and high prices in the underlying commodities for transport and industrial production were definitely elements beyond the sort of money printing angle to the price increases that we were seeing across the broad market.
Um, so again, I guess the candlesticks are still long. So yes, we do see an easing from that spike up in mid 2022, but this is a market that is clearly not settled down, right?
Yeah, so this looks a lot to me like the '04 to '08 market in gasoline futures, where you had a
Mm,
long period of really intense price sensitivity.
okay.
And I guess it shouldn't surprise us, in '04 to '08, there was a lot of intense activity in the Iraq and Afghanistan wars.
Right,
Um,
right.
one of the things that does, it takes a lot of gas to fly airplanes and blow things up.
Mm,
Um, and so, and, drive tanks and whatever else. Um, so uh, there's a lot of sensitivity that's introduced as a consequence of that. And in both cases, the most flexible source of supply, which is the OPEC plus countries, have
hmm.
been disinclined to acquiesce to the requests of Western governments.
Yeah, which we discussed briefly, I think. Um,
Yeah.
yeah. So yeah, so you don't have any. Sounds like you're being very cautious about trying to predict anything about the energy markets over the next year. It sounds like it could. I mean, with the war still going on, like you said, OPEC Plus is not looking like they're going to change from. They're not going to do anything dramatic, right? As far as we can tell,
And,
they're going to keep doing what they're
and
doing.
we've seen no evidence that Western governments are, going to make it possible to exploit their own resources.
Yeah,
So,
right. But we haven't heard
uh,
about the Keystone Pipeline being back on the table again or anything like that.
well, and the Truss government in the UK indicated that they were going to open up fracking. The Truss government didn't last very long,
And then it was
and
back off the table, I think.
then it was back off the table, right?
Yeah, yeah.
So, um, I'm not sure exactly how long that wall of silence lasts in the face of higher energy costs, but uh, at least for a little while.
Okay, ready to turn to our final chart.
All right.
All
So,
right, PPI.
what PPI, Producer Price Index.
Now, real
So,
quick caution as people look at this, you used a longer time scale in this case. So this is
oh, did I?
yeah, it's over 10 years. Um, the earlier part of the chart is January 2011. Um,
Yeah, yeah. Okay, and PPI tends to lead CPI.
mhm.
They follow a similar trend. Typically, the lead is something like 1 to 5 months. We've seen that pattern in this inflationary spike where PPI has led CPI just exactly the way that the Austrian analysis would have indicated, which has been kind of fun to watch. I might do a Twitter thread at some point about
Yeah.
that. But
Yeah, sorry.
we've seen.
Let me make sure everyone's following along. PPI is producer price inflation. CPI is consumer price inflation, and Austrian theory of the business cycle suggests that you're going to see the money affecting the low interest rates. The artificially low interest rates are going to have an effect in uh, earlier stages of production, and then only later might it show up in consumer price inflation. And this is a simple point that's confused a lot of people because in the 20s, for example, they said, well, we have no inflation because consumer prices are just fine. We
Yeah,
don't see a big shift up in consumer prices. Whereas Austrians thought that there was actually very dangerous inflation. In fact, both Mises and Hayek predicted the 1929 crash based on what they were seeing. And they were not looking at consumer prices to make that prediction, I don't think.
well, and we saw the same kind of denialism, you know, in the in the summer of 2021, when the Biden administration in the United States and many other administrations were saying, "What inflation?" and
Mm-hmm.
then
Yeah.
you know got hit like a truck.
Yeah.
Um, so
Right. So what we
and
see here is starting around the beginning of the pandemic, we see producer price inflation go up, 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 all the way until early first half of this year, and then we start seeing just very recently, last half of the year, we start seeing a sharp downward trend. But notice we're not even anywhere near where we were just 2 years ago at the beginning of 2020. I'm sorry, 2 years ago. Wait, it's end of 2022. 3 years ago. Sorry. Right? Because there's all of 2020, 2021. Yeah. So we're nowhere near where the PPI was just 3 years ago. It's back to where it was like a year and a half ago. Right.
yeah, and if inflation stabilized at annualized 7%, none of us would be happy with that. So,
Yeah. Right.
um,
Which is where we're
so
at about right now, is about 7%. Yeah.
yeah, so so this is a qualified good news story.
Yeah.
7% is a lot better than 12%,
Yeah.
but you know,
Still not good. Oh,
so
but worth saying that again, you're being very careful not to say that these trends are going to hold, but across the board with these trends we've been highlighting, we do see a trend downward. Like where we are right this moment is still not that great, but the directionality is in the right direction for the moment. Though
yeah.
you would not want to put a lot of chips on it continuing to go in a good direction. It's still just
Well,
too volatile right now.
I mean, if I was to take a trend line and apply it to a bunch of other random points on this graph, how many times would I be right?
Yeah, right.
I mean, some, but not a
Yeah, yeah.
lot.
Yep. That's right. But anyway, that is the good news we have. The world didn't end, and we didn't all starve to death. um,
Yeah.
but people are feeling the pinch across the board. My friend in the north of England is just turning on his heating for 2 hours a day, and talking to neighbors who are also doing similar things, taking crazy measures. Or what would traditionally have been considered like, why would you do that? Things that seem outlandish would have seemed outlandish just a couple of years ago. People are doing some very unusual things to deal with high energy
Well,
prices, for example.
it's actually a really interesting study in consumer behavior. I mean,
Mm,
take the human element out of it for a while. For the moment, it turns out that the amount of money that people will pay for home heating is actually quite elastic. So
mm,
when the price of home heating goes up, people actually use a lot less of it,
wow.
um, which is something I would not have thought,
Yeah.
and I don't think a lot of people would have thought it. And one of the really unfortunate parts about this episode is I think this is a very unfortunate piece of information to give to the ruling class. Um, uh,
Right.
you know,
Similar to the
one of the,
information that what do you know? You can lock Europeans, you can lock Italians in their homes, and they'll put up with it. What could we do with that information, right?
yeah, no, it's uh, I, I I cannot overemphasize how much it would be good if um, if that wasn't the story. But
Yeah,
anyways,
right, right,
it
right.
is.
Yeah, so this has been revealed that you can squeeze them a little more. Yeah, it's funny. It's the old Marx thing. I don't know if you know Marxian theory, but immiseration of the working class and all that. He basically said they're gonna squeeze the workers more and more until they're barely sustaining themselves, right?
Yeah,
Um, and that didn't happen. Actually, the growth in the market ended up benefiting everybody, including workers. So his predictions were just wrong. But now we see a ruling class that seems to be ready to push us into pods and see how much we'll put up with, right?
well, I think we're very much in. So, like, if you look at the period of time that Marx's analysis was applied,
Yeah.
um, most of the time it was applied to was a period of pretty broad-based secular growth in the economy as a consequence of industrialization. And so uh, the game of politics was very much not a zero-sum game, right?
Mm-hmm. Right.
Good governance had really, really positive consequences in terms of total economic output.
Yeah.
And you and I would make the argument that if you got back to something close to good governance, maybe you could restore that trend line at least a little bit.
Yeah.
But it certainly seems to me that our ruling class has internalized the idea that uh, economics is a zero sum game once again, and that uh,
Mm-hmm.
growth is over, and therefore we should try to maximize the fraction that we can kind of squeeze out. Um, which is, it's not a great place to be, but here we are.
Let's see. I am realizing there is one more thing I want to queue up here. Yeah, so I think that's all the analysis we wanted to offer today, right?
Yeah.
Then I just have a couple things really fast. I've been meaning to do this for some folks. Here we go. Let's go back to screen sharing. There's a Discord called the Austrian Economics Discord, and they have been working with friends, mostly who I know through the Mises Institute, but some others, um, and having them have little like speak to the Discord kind of things and stuff like that. They are about to put on a conference that looks really good, very relevant to a lot of the topics we discuss here. So, and look at these speakers. I recommend it to you. The Austrian Economics Discord Conference on Inflation, Money, and the State. It's a 2-day virtual conference featuring Jeff Deist, president of the Mises Institute, Safadine Amus, who academic agent I got to meet, by the way, in person, who wrote the Bitcoin standard, and now the fiat standard has come out. Then Stefan Kinsella, I've known for years. Jonathan Newman is a newer face, but a really sharp guy. Patrick Newman as well, no relation. And then Mark Thornton is an old friend, and Walter Block I've written a paper with. And then McCloskey. So this will be happening January 7th and 8th. And they have a trailer. I'm not going to play it, but I would like to share the link with you. Here we go. I'm going to share the link in the live chat to that. And that should, if you go to that YouTube link, you ought to be able to see their, it's not a YouTube link. Oh, I hate these wrappers. Here, wait a sec. Okay. I'm going to grab the proper link I want to share. Okay, there we go. Without the Twitter wrapper on it. There is that. And I would recommend you check it out. Great speakers. I can endorse those speakers. And then otherwise, again, just mention that we'll have no show at all next week. I will have some guest appearances. I guess I could mention that. I'm scheduled to be on with Aaron McIntyre, our friend who has moved to the Blaze. And then
Absolutely fabulous guests lately. You should.
wait, sorry. Repeat that. I went to the wrong screen.
Oh,
And your mic was off. Go ahead. He's gotten good guests. Go
oh,
ahead, comment.
Oren's gotten some absolutely fantastic guests on lately. You guys
Yeah,
should all go over there. He got Joel Berry from the Babylon Bee recently, and a couple of other
awesome.
quite good ones. So
Yeah. So he's got a higher profile going to the Blaze and going full time with this whatever we do, this content creation stuff. And so he's got more of a platform. He's got an institution behind him, and so I'm excited to have the opportunity to appear on his channel to a growing audience. You all may not know, but Academic Agent has dubbed him our Phil Collins, and the analogy is to how Genesis was a very successful band, right? But then Phil Collins became mega successful, right? And so it's a way of saying that he's our breakout star, and he really is. So I'm honored to be able to guest. Oh, and I should mention the topic. It might be of interest to folks who like this show. FDR seizing the gold, and what happened with gold, the relationship between the U.S. government and gold in the 20th century. So
That
I
is a
look
great topic.
yeah, I look forward to it. I hope I've done my research by then, and I look forward to hearing what I say. But anyway, um, but I know that it's a good story arc to tell, and I just want to make sure I get some certain details right. Also, the Old Glory Club, of which I am currently the president, we've been putting out 2 articles and a video each week. I will be on. I'm planning to be on the video since I'm going to have some time off work. I'm planning to be on our weekly Friday video next week. So won't do the show next week, but we'll be on some other things. So look out for that. I'll share them on my Twitter, and then in the final week of the year, we should be having our book cover judgment. And if you've joined it before, it is one of our most popular shows because our judges take it very seriously, and we have some great discussions, and it's just fun. And the entries tend to be some of them are kind of rather serious, but some of them they have a lot of fun with them, and fun is had by all. So really recommend that. And I send out real commodity precious metals off to people, usually silver coins. So
Which they can
okay.
keep they could keep right up until FDR's ghost comes for them.
Yeah, right, right. Until FDR decides to seize our precious metals once again. Uh, okay, so I think that's everything. Thank you, Black Horse, for joining. I think was it this year? I'm trying to remember. I meant to. I did create, as you requested, I did create an Econ Minis playlist, but I just started adding to it as we were doing more shows, and I haven't backfilled it yet. Otherwise, it'd be fresh in my mind, like when we really started doing this, because I was going to at least cover the Black Horse era of Econ Minis in that playlist. But I'm thinking
Yeah,
it's
I
early
think it's
this year at
I think it's
least.
getting yeah, it goes back at least a year now. So
Yeah, yeah. So thank
because
you. Oh no,
some of
no.
the
I
first
know
shows we did,
we were doing some stuff last winter and fall. I think it's coming back to me now, right?
yes.
Yeah.
So the first show that I did would have been like November 2021 or
Okay.
October
Right. Right.
2021 for Econ Minis anyway.
Yeah. So about a year, and I think it's obvious to everyone that Black Horse has leveled the Econ Minis part of the Radical Liberation Channel way up. So thank you, sir, for sharing your knowledge in this area. It's been great, and I have learned a lot, and I hope others have enjoyed learning from Black Horse as well. So Merry Christmas, everybody! If we don't see you later in the year at some of on our special stream.